Welcome to the Daily Block, the top events from the past day in crypto and why they actually matter, not just for your FOMO, but for your P&L. Solana ETFs look like October is the month. Big asset managers from Bitwise to Fidelity to Grayscale and VanEck filed amended S1s, adding spot Solana ETF language and even staking clauses, and analysts are now penciling approvals in around mid-October. Bitwise CEO Hunter Horsley went full meme, joking about $1 trillion first-day demand after watching European ETPs gobble up flows. That's hype, but it's baked into expectations now. If the SEC clears a spot, Solana ETF with staking, expect funds to pull liquidity from exchanges and into custodial buckets almost overnight. Why it matters? An on-ramp like that would be a liquidity magnet for SEOL and Solana adjacent tokens, creating huge flows, short squeezes, and momentum plays. Risk counterpoint. The SEC could still slow-walk staking language or add conditions, and if approvals disappoint relative to the meme hype, you get violent fade moves. Bitmine gobbled roughly 232,520 ETH during the dip. On-chain sleuths and Arkham Traces show Bitmine, reportedly tied to Tom Lee interests, bought about 232,520 ETH via OTC desks like Coinbase and FalconX, pushing its treasury toward multi-billion dollars. The buys happened during a weakness window and were waved around by institutional backers like ARK, so this looks like a deliberate accumulation into lower prices rather than random flow for traders. Concentrated corporate treasuries hoarding ETH means less available float and a bigger asymmetry to the upside when sentiment flips. Risk counterpoint. Such large treasury buys reduce available liquidity, but also create focus on sell triggers. Any headlines that force mark-to-market selling or balance sheet rebalancing could spark outsized dumps. Kraken is courting a massive private check to chase a $20 billion valuation. Bloomberg says Kraken is in talks for a strategic raise of $200 to $300 million to push toward a roughly $20 billion pre-IPO valuation as it grooms for a public debut, leaning on Morgan Stanley and Goldman for filings. That follows a recent $500 million round that valued the exchange at about $15 billion, and signals management wants to lock a higher private price before listings in 2026. A big exchange IPO would redraw the custody and routing landscape and could turbocharge flows into exchange tokens, custody solutions, and derivatives on day one. Risk counterpoint. Regulatory pressure and litigation remain persistent overhangs for U.S. exchanges. An IPO can rally sentiment, but also crystallize legal and compliance scrutiny that weighs on multiples. USDC eats European stablecoin market share as MyKA sidelines Tether, with MyCA enforcement tightening and some European venues trimming or delisting USDT. Circles USDC, aggressively MyKA compliant and multi-chain, is picking up much of the displaced volume in EU rails. Markets are already seeing trading pairs and liquidity pools rebalance toward USDC on certain exchanges and DEXs, which shifts where traders peg in and out of altcoins. Why it matters? The dominant stablecoin in a region determines funding rates, spreads, and which chains get immediate swap volume. So USDC inflows into EU rails can change funding dynamics in minutes. Risk counterpoint. USDC concentration increases counterparty and regulatory linkage to Circle, and any operational hiccups or regulatory news could cause abrupt reflows back to USDT or other alternatives. First US Dogecoin ETF launches, and Doge actually moved the Rex Osprey Dogecoin AV, hit the CBOE, and printed surprisingly strong early volume, seeing millions of dollars in the opening hour, and nudging Doji into that 25 to 30 cent trading band. That's important because ETF wrappers convert latent retail and new institutional capacity into an easy buy button for meme assets, broadening the potential buyer base. Why it matters. Even small ETF inflows into meme coins can amplify retail FOMO and trigger leveraged squeezes across correlated tokens and derivatives. Risk counterpoint. Meme ETFs are sentiment dependent. If inflows fade or other filings are delayed, sentiment can backfire quickly and uglier than usual because the underlying has limited fundamental support. Fed speakers plus government shutdown risk equals spicy volatility. A raft of Fed officials are scheduled to talk while Washington flirts with a government shutdown that could delay key employment data before the October FOMC, making markets particularly twitchy for any subtle hawkish or dovish tone. Crypto, being the leverage playground it is, tends to react faster and further to ambiguous macro cues, especially around jobs prints and Fed guidance. Why it matters. Macro event risk is a common trigger for intraday blowups and options expiry squeezes. Sizing and stops should reflect the possibility of headline-driven gapping. Risk counterpoint. Sometimes the news is noise. Not every Fed sentence flips markets, but complacency in sizing is what turns noise into losses. Bitcoin hyper presale crosses $18.5 million. Layer 2 drama intensifies Bitcoin hyper. A presale project pitching Solana speed smart contracts on top of Bitcoin security raised about $18.5 million in its presale, marketing heavily to retail and presale whales with claims of partnerships and fast execution. A big presale number means a lot of locked concentration that will rotate into liquidity on listing day. The narrative of Bitcoin L2s is heating up as traders chase the BTC plus smart contracts angle. Why it matters. Presales with that much cash behind them can cause massive post-listing volatility as early holders and private wallets test exits or coordinate dumps. Risk counterpoint. Presale hype frequently outpaces technical delivery. Due diligence on audits, tokenomics investing is the difference between a moonshot and a rug. Ozak AI presale surpasses $3.4 million. AI plus crypto, still a retail magnet. Ozak AI crossed roughly $3.4 million in its token presale at around 1.2 cents per token, touting real-time predictive signals and backbone infrastructure partnerships aimed at traders and platform builders. The AI plus crypto narrative has become shorthand for easy retail capital, hype sells, and presales lean into fear of missing out to stack allocations. Why it matters? These presales concentrate retail and whale money into projects with short timelines to listing, making them high volatility candidates on day one. Risk counterpoint. Presales are inherently risky. Smart contract audits, vesting cliff details, and listing commitments are where the stories die or survive. Quick trade tips for degenerates who actually want to survive ETF and regulated product headlines move enormous amounts of capital fast. Scale your position sizes and widen stops when filings and approvals are live. Watch on-chain stablecoin flows. A sudden USDC influx into EU rails tells you where alt liquidity is about to migrate. Track big OTC treasury buys and pre-sale cap tables. These explain why certain tokens squeeze or tank. Keep the macro calendar and Fed speakers in your peripheral vision. A single line about labor can flip option skew and funding rates. Subscribe for daily dose of market sauce, memes, and actual actionable headlines served with a side of sarcasm. I post these every trading day, so your future self will thank you or mourn you appropriately. That's today in crypto, where the gains are imaginary and the pain is real.